the shorts and the sort of detractors are really betting on whether or not Tesla can pull it off in the time frames that are really required of a public company to report, that 90-day shot clock. What you have to look at is the fundamentals of the company, what they're doing long term, and Tesla has always been a bet about the future.
If I were short this stock right now, I would be sweating bullets for this next piece of news. Let's say he has dinner with Cook, or he has dinner with Zuckerberg, or he meets with Sheryl Sandberg. I would be screwed, because there is a scenario, and you may call it small, but if Apple wants to be in the car business, this is how you do it. The product is fantastic. I love my Tesla. I would never buy this stock. Right. Never, never, never.
The beauty of shorts is if you have a good quarter, if you do your job, then they have to buy back the stock at some point. This is a guy who's sleeping in the factory. This is a guy who's pushing. I would tell shareholders, be grateful that you have somebody that committed to the company and recognize that, being unique is what has helped make Elon or help make Tesla so successful.
Look at sort of the average Tesla holder. This is a stock that you hold on faith. You believe that this is a true disruptor, and these folks seem to be willing to hold it through anything. Now, I agree that there is some fraying at the margins, and if anybody loses faith, the problem that Musk has is that he has set himself up for failure. He has overpromised and underdelivered for a while now, and the fact of the matter is that he is trying to do a tremendous disruption, and to accomplish that will take a lot of time, a lot more time than I think investors are going to give him in the end. I'm not particularly optimistic about how this is going to end up. While I love the Tesla story and I want it to be successful, I'm not sure it will be under Musk's leadership right now.
Once investors realize that going private was a premature statement, that the funding is not secure, that we're a long way to go private, then you have to look at the fundamentals. And the fundamentals don't indicate a stock price, even at $300. The fundamentals, in our view, indicate a stock price drifting closer to $200, because you have to look at what's going on with gross margins going into next year, production. If now the complications of going private increase, it's not a done deal, as he indicated. Right. That was a definitive statement saying funding is secured. We're going to be in an ongoing kind of, discussion about how they're going to go private, who's going to go take them private, what is the structure of the deal. None of these details are known. So you're going to have that overhang on the stock for months and months and months.
It's dinged your assessment of this company, right? I mean, you used to be, or you still are, one of the biggest bulls, but it sounds like you're rethinking everything here.
No, I wouldn't say that. In terms of fundamentals, we've never been more positive. If you look at the results and the outlook on August 1st, I mean, this is a multi-billion-dollar company that guided for 50% growth in the third quarter. They have overcome their Model 3 production constraints. This is the best-selling small and mid-luxury vehicle in the month of July, and they're going to be profitable. So from a fundamental standpoint, which is the basis for our buy rating and $450 target, we've never been more optimistic. But what's happened since that tweet, I think, is certainly an element that we were not anticipating.
$385 price target on it. We upgraded after the last quarter, given the guidance around the gross margins. We think there's actually a lot of cash generation potential here. I'd agree with James on that. On some level, I'm not convinced that they've completely revolutionized the automotive industry, but I do think that they're going to make money on a $55,000 to $60,000 car with the Model 3. And as we go forward, there's a lot of risk around the strategy of the company and how much money they're spending and how they're going to generate a return on that. But from our perspective, they've kind of turned the corner on the basic cash generation and have an opportunity to really grow this company, and they need to get the right team in place to do that.
We think they're 3 years ahead of any other auto manufacturer in two ways. One, very importantly, is the chip, and the other is their battery technology. So, yes, our conviction has increased.
What about leadership, whether they're going to go private, the tweets? Yeah. I mean, it's endless.
Yes, that $420 price. We're writing a letter to Elon and the board explaining, actually showing our models, top-down and bottom-up models, showing how we get to $4,000, which if you use a 15% discount rate would be $2,000 today. So that $420 price to us is
too low.
Way too low.
I was wrong on this. I think it's still true that the company should be a private company. That said, it's just simply not in the cards and sets up for what I think is going to be one of the most dramatic stocks over the next few years. And I still believe in Elon Musk, albeit it has been tainted over some of the things. He's going to have to earn back some of that trust. But I believe that this is probably the best roadmap of any company in renewable energy, around electric vehicles, autonomy, the storage, the solar. All that really is this secular theme. And I think Tesla's leadership will play out. And I think we're going to see the company move to a cash flow positive position. It might not be in the September, December quarter, but I think it's going to be in enough time to get this company escape velocity in the next year.
What I wonder is whether or not Tesla's own distractions will limit their ability to get into the right deals and be well positioned financially to make the right transactions. Given where the stock price is, if the stock price were to rise, then that gives them a lot of leeway because they have some convertible notes that come due this fall as well as in the springtime. And so they will have an ability to likely refinance that, but based on where the metrics are, that provides some level of risk.